live from CNBC TV 18's headquarters in Mumbai. This is Opening Bell with Udayan and Mukherjee.
Good morning. Welcome to Morning Call. Well, this is going to be an important week for the market because of what happened on Friday. The market got bludgeoned by an unexpected blow on the last trading day of the week. It was perhaps the worst kind of weekly closing you could have expected or feared, and that's what we got, a closing below 5400 on the Nifty. So the mood would be quite terrible as we entered this week of trade. Everybody would be scratching their heads on what led to that sell-off, because it was not led by global selling, and whether we can stabilize this week, or was last week's event, would that count as a bit of a breakdown for the stock market? Let's see how things pan out starting Monday. Mitali, good morning.
Hi, Udayan. Morning. More disappointing because of how much hope Thursday, put forth for the market.
Yeah, you're right. But with the Friday morning, everybody was talking about that 100-point pullback to 5,500 plus, and before you know it, you get hit so badly. And I think that's probably the damaging thing, what that Friday has done. More than a breach of a level, I think the conviction in any kind of a pullback now just got really, really bad. Anyway, the market was not playing for major pullbacks. The whole orientation of the market was to short any kind of a rally. But looking at the ferocity of the sell-off on Friday after that Thursday rally, I think it would become doubly so, and people would now be looking at any kind of pullbacks as opportunities to go short once again, because that's the trade which is playing out for the last few days. And I don't think there would be high conviction in the durability. In fact, utter suspicion whenever you get those kind of pullbacks that you saw last Thursday.
There is also the growing feeling within by the end of Friday that something is going very wrong with this market, and it's not as simple as an FI outflow or one particular technical niggling the market. Something is wrong.
Yeah, the screen is telling you that at least. The rest is a matter of opinion. Some people think this is getting overdone. Some believe FIs will not sell. Some believe there will be a pullback. Some believe we'll go back to 5,100. But that's a matter of opinion. Once you just strip yourself of that and you look at the screen and see what this screen is doing relative to pretty much anything else in the world, you get a very bad feeling at the pit of your stomach, because we've snapped all correlation with any other global market performance over the last few weeks. Suddenly, sometimes not driven by liquidity or any kind of apparent news flow, you get these violent setbacks. And just look at the kind of excuses which people spoke about on Friday. Somebody was talking about the Prime Minister speaking about being worried about corruption. You bet he would be, or he should be. But what is there to surprise the market about that? Others were talking about rumors of the DMK pulling out. So, I think this market just needs an excuse to sell off with the violence that it sold off on Friday. It's difficult to say where we'll end up with this, and I don't think it's about valuations and how much we've corrected in terms of P multiples. But as you said, something's going wrong with the screen, and it's not very heartening to watch.
Friday seemed like a confirmation, though, that not only was the bottoming process not done, the market is probably headed lower. The index is.
I think there was an element of surprise there as well, Mitali. I don't think most people would have been prepared for that jolt on Friday. Friday morning, it looked like we had a good rally. We might consolidate a bit, but it looked like 5,400 was safe for the moment at least. And that confidence just got a kick in the teeth by the end of it all on Friday afternoon. So I think it was not just a regular 120-point sell-off on the Nifty. As you said, coming as it did after the Thursday rally, I think it probably was even more debilitating for sentiment. Now I think everybody's in a bit of a shell. I don't know whether selling picks up now because of the breach of 5,400, what the global guys do throughout this week. These are difficult things to map. So for now, I think people will start talking about, maybe a lower base for the Nifty around 5,200, 5,250, and maybe on the upsides, that level that we saw on Thursday, just above 5,500, 5,550. That could be some kind of an operating range, which would pretty much be in sync with the kind of progression of events that the market or the Nifty has been seeing, which is gradually formed lower and lower ranges, and it's perfectly possible that we are on our way to forming a slightly lower range for the Nifty once again. I guess traders will be more prone to being short on this market now at every kind of an up move or even without that. So it's not a great psychological setup for the market, and whatever little expectation that you had about cherry picking at 5400 as a base, I think people will now think 5 times before going out and buying stocks after the whack that they got on Friday.
Also, odd that there's no dire signals being pointed in the internals. I mean, we didn't lose that much money, as you said. We didn't collapse on the put-call ratio. There's no obnoxious piling up of shorts.
Yeah, all the more surprising where that 400-point Sensex sell-off came from. The FIIs did not sell, domestic institutions did not sell, they were actually on the buy side. As you said, FIIs did not short an inordinate amount in the Nifty futures, but you saw the pressure on many of these large cap names, forget the mid caps, but the way the ITCs and LNTs of the world suddenly sold off, it makes you wonder, and this is a point we were debating last week as well, where is the supply coming from? Because it doesn't look like there's a huge amount of FIs selling. But even that is not required for the Nifty to lose 100 points all of a sudden. So the data is not supporting the kind of sell-off that we saw, but we saw the prices move and how it did. So it is a little baffling, but I don't know how to read this. Also in the options data, as you're saying, in earlier days you could read the options and where the puts were being written, where the calls are being bought, etc., to get some sense of where the boundaries of this market are. But I think the options market is not giving you any clues at all right now. It's merely changing around from day to day depending on where the Nifty closes. So you just analyze the options data on Thursday and Friday. It's a huge picture in contrast. So we like to think of the options money as the smart money, which will give you a clue of what the market's going to do next. But I don't think there's any smart money in the market right now. It's all just scared money, and that's how it's playing out on the options data. So best not to get swayed by the put-call ratio or the writing of a certain strike price or the writing of a certain call strike price. I think they are changing with every day depending on which way the Nifty is swinging.
A lot of it is being put down to ETF outflows, again, which as some point out may not be the most intelligent way to track money, but it's always uncomfortable when you lead from the front in underperformance. To be down 12% is streaking outperformance on the way down from this market.
Yeah, but I also am not a big fan of pointing fingers at the ETF money, but when it was coming in last year, we took our gains with both hands, did we not?
Yeah.
And now to say, that's dumb money which is suddenly going out and they don't understand what they're doing. There's a sword which cuts both ways. I mean, it helps you on the way up and go to 17, 18 PE multiples. Where it gets scared and goes out, it's their money and you get crunched down to 14 PE. So that you can't be sulking at who's buying and who's selling in the market. It's a market. People will do what they have to do. Having said that, you're right that, this sudden 13-14% fall when nothing much has changed in the world, or other markets have held out much better, it makes you wonder, if you are looking at global markets as a market and us as a stock, I think we are behaving like a Unitech or a JP Associates right now. There's no getting away from it.